Let's talk about how to position in the wake of all that uncertainty. Our next guest likes financials still, predicts large earnings gains in the next 9 months. Joining us this morning, BMO's Chief Investment Strategist, Brian Belski. Brian, good to see you.
Thanks, Carl, for having us.
I just saw this across a few moments ago, this line about countermeasures being inevitable. Are you worried about that?
You know, we're not. So here's what's going on. You just said the best word of all, and it's guessing. And the thing that we don't know is what we don't know. And here's what's happening. With certainty, we know that the United States stock market had a 10% correction. That's what we know for sure. We don't know exactly what's going to happen with respect to the tariffs. And you have too much guessing, too much uncertainty, too many models, too many people trying to make the big call on the market. Here's what else we know that no one's talking about. The Magnificent Seven in the first quarter were down 16%. The rest of the market, in terms of the 493, positive 0.1%. No one's talking about that. We're also not talking about enough. The equal weighted index actually down 1%, the overall index down 4.6%. We're making market calls without actually understanding that the stock market is a market of stocks. This could all change at 4 o'clock. It could all change a week from now. We will react or move our models when we know what we know. We don't know right now. And oh, by the way, fear is not an investment strategy. Faith is, and faith is in fundamentals. And the fundamental construct of the United States stock market has not changed. Just one real quick comment on consumer sentiment and things like charts like that. The last time consumer sentiment bottomed was November of 2022. That was a month after the brand new cyclical bull market started. So I think that we can be macro investors, which, oh, by the way, have been wrong for the last 11 out of the last 13 years. And so I think that we need to take a step back and understand that the United States stock market is the best market in the world, period. We've had big performance in Europe and China. Why? Because this was oversold and it was a trade. You tell me 10 companies in China or 10 companies in Europe that are better than the top 10 companies in the United States. Tell me right now. And the answer is you can't. And so I think that there's a lot of uncertainty. My competitors and colleagues want to make these big market calls. I think it's not just. I don't think it's based on fundamentals. And I think it's based on trying to pay a rhetoric to their clients that they're talking to and to try to make the big call.
I feel like you had to get that off your chest. We've been talking about the equal weight, Brian. Is your point on that it's just that maybe a bigger part of the reason of the sell-off and the market volatility has been the unwind of the AI trade because it just got so crowded and people are wondering if it's overhyped than tariffs?
I don't think the AI trade, Sarah. The other 493 stocks have something to do with AI, right? I think it's the momentum trade unwinding. And we have been kind of forced into a crash course, quite frankly, into normalization. What does that mean? We've not had normal markets since the mid-1990s. Let me just go on record for that. It hasn't been normal. 0% interest rates aren't normal. The way the Fed's been acting is not normal. 2020 was not normal. 22, 23, 24, not normal. So what's normal? We've been saying this now in part of our longer-term thematic work for the next 3 to 5 years. High single-digit to low double-digit market performance. Same thing with earnings growth. Some sort of a trading range, a tight 100 basis point trading range in 10-year treasuries, 350 to 450, and multiples high teens to low 20s. That's a normal type market that we think we've been crash coursed into this year. The momentum trade on a near-term basis now become defensive stocks that are expensive, no fundamental growth that people are buying because they've read that on page 65 in their business book. This is not investing. So I do believe that the market is going to rocket back the second half of the year. No one's positioned right now for that because we're all negative, we're all scared, and we're basing our investment decisions on fear, not fundamentals.
Well, it certainly fits directionally with a lot of calls right now that there is some crucible we got to get through in the course of the second quarter or summer, and then we'll end the year stronger, Brian. We'll see. Good to talk to you. I'm sure we'll talk soon. Brian Belski.
Thanks so much.
I mean, on that.